Okay, folks, welcome to Thursday Night Stock Charts Live. This is where we review the news of the day, the trading week, how we're poised to close out the week with one trading day left to go. We're going to go over the news. We're going to talk about the charts, the weekly charts in a moment, and we'll do some member stock chart requests. So we have it. He blinked. He did it. Jay Powell, the pimp Mac Daddy of them all out there, not only officially paused, but also alluded to vis-a-vis dot plots, rate cuts, and lots of them coming down the pike. So, where to from here? Well, longer term, we're going up. Shorter term, maybe some consolidation, maybe a pullback. We'll go over the weekly charts in a moment. We'll talk about it. We'll do some daily charts as well. Some indexes or indices are very extended right now. I would be a buyer. Would I initiate a new trade here? No. In fact, we booked profits on TNA, which is the leveraged ETF, putting you long of the small caps, made that money real. I still like them. I think the small caps are going up higher, but the banks have ripped. There are a lot of banks in that index or ETF, and we need a pullback. They've gone way too far, way too fast, and a pullback is a good thing. So let's get to the news of the day. Then we'll segue over and into the charts. So let's get to it. Firstly, you know what? Let's say hello for like, subscribe. You know the deal. Trader Isaac. Hello, Bob. Powell trying to save his job and China Joe's job in 2024. You bet. Jody, the lovely Jody, welcome. Hello back to you. Happy holidays to everyone. Merry Christmas. Happy Hanukkah. Whatever you celebrate. Festivus. I don't care. Happy holidays. Okay. I always like to start things off with a little bit of a wake-up call as to what's going on in the minds of our so-called masters over at the World Economic Forum. So never forget these guys. They never, ever sleep. Let's take it away.
The technology now is, and digital technologies mainly have an analytical power. Now we go into a predictive power, and we have seen the first examples, and your company very much involved into it. But then the next step could be to go into a prescriptive mode, which means you do not even have to have elections anymore, because you can already predict, and afterwards you can say, why do we need elections? Because we know what the result will be.
And Sergey Brin, the co-owner of the surveillance tool, which is Google, agrees in acknowledgement. From Peter Lynch, and this has to do with there are a lot of reasons to be bearish on the market vis-a-vis debt, vis-a-vis geopolitical risk, vis-a-vis a ton of stuff. World Economic Forum, whatever you throw it out there. There's plenty of stuff that could drop the markets, but I love this quote. Far more money has been lost by investors preparing for core corrections or trying to anticipate corrections than has been lost in corrections themselves. Very, very true. Very, very true. And I bring this up from time to time. I get knocked sometimes for not being a true contrarian, meaning I'm not bearish all the time when the stock market's up. That's crazy. That's absolutely crazy. That's bananas. You're destined to lose money with that type of mentality. Now, I'll show you in a little while what I am short of. We are shorting, but not the overall stock market. So let's go to the economic picture so far this week. We'll talk about first valuations and the Shiller PE ratio. We are at nearly 32 on the Shiller PE ratio. This is very expensive. The mean is 17.07. When we take a look to validate that, we want to use the Buffett indicator. We remain overvalued. We've been overvalued for quite some time. And we are at what? 1.4 standard deviations beyond the mean, or 44% overvalued relative to the mean, which is all the way down here in this gray dotted line. Very, very extended. But we've been higher before. We can go higher. They're anticipating rate cuts, money flooding through the system. So to think that this stock market can't move up higher is crazy. It's absolutely crazy. Looking at economic data that is or has come out, CPI came in a little bit hotter than expected. The markets did not like that. Core CPI, as expected. Inflation year over year, unchanged. Wait a minute. Didn't Jay Powell just say that he's pausing and the dot plot says they're going to be cutting rates? But what about this? Where's 2%? He's saying that there's a lag effect. The measure of deflation is still catching up with the overall economy. Therefore, he wants to get ahead of it and begin to, before too much deflation sets in, he wants to create more inflation. He's a genius. These people are geniuses. That's how smart they are. Core CPI year over year, 4% unchanged. Yet they're ready to cut rates again. The federal budget was expected $290 billion. The new one, $314 billion month over month. That's a big beat. But nobody cares. Nobody cares. Producer price index. This helped the market quite a bit. This is the measure of inflation at the producer level, and even at the core, it came in half as much as what was expected. I don't have a year over year. I do actually. 1.2 year over year versus 0.9. So you saw a little bit of disinflation at the producer level. And of course, we got the FOMC rate decision. Jobs numbers today, they came in really, really weak. Import price index, they were expecting a decline of 0.8%. They got half of that. Retail sales beat. I'm surprised the equity markets, they really shrugged this off. Buy now, pay later, really paying off for the retailers. Retail sales minus autos came in hot. So the consumer is out there, buy now, pay later, and they're buying goods. Tomorrow, Empire State Manufacturing Index or Survey, industrial production, not much, not really a market mover. So let's take a look now at the Federal Reserve's balance sheet. It's as of yesterday, released every Thursday night. Let's drill down here. We saw a rise in the Fed's balance sheet last week, ever so slightly, not much. The trend is clearly still down. He did say that he's going to continue to roll off debt off the balance sheet. Now, as for the whys behind what happened here, well, you can't really point towards the expectation for GDP. This is Liz Young out of, I believe, SoFi. The latest Atlanta Fed GDP nowcast shows 2.6% for Q4. That's up. The latest upward revision since last week. So GDP growth for Q4, they're ratcheting up expectations. Yet Jay Powell needed to pause and to mention that he's going to be cutting rates in 2024 and 2025. What is out there? What are they concerned about? Why? Why are they doing this? The Fed has said that they will likely need below trend growth to get inflation down to target. Higher growth challenges the current rate expectations, if only a little. True. You get higher GDP. Forget about that push down on inflation. And if anything, inflation is going to move up higher unless you get productivity that moves up higher. Now, here's the PPI. We spoke about this earlier. PPI versus CPI. Really, PPI dropping like a rock. CPI a little bit sticky. Not a little bit, a lot of bit sticky. So producers are not passing along as much as they should savings to the consumer. So let's talk about the shenanigans that is going on here. I mean, they did a major pivot here. This is Yellen back in June of 2021. This is the CPI. Yellen says inflation should be lower than current levels by and here you have it. Woof, it ripped through the ceiling. So she was out most recently forecasting that you're going to have a dovish Federal Reserve. So Janet's back in business of influencing the Federal Reserve, basically a threat, and their independence. So here's Fed Chair Powell, December the 1st. Fed policymakers discussed, U.S. Fed Chair says premature to speculate on rate cuts. Only 12 days later, Fed policymakers discussed timeline to start rate cuts. What happened? What happened? I forgot where I was going with this one. Oh, the Fed is far more reluctant to trigger recession during election year. So one of the theses that are out there is that Yellen, being the emissary for the Biden administration and knowing his poll numbers are through the tank, they said, listen, Powell, hey, you got to get this economy going, man. This is the inflation be damned. We need the voters that are out there to go out there because they have 401k plans and they need to vote us back in. They need to see their 401ks grow. Therefore, you got to cut rates and get this stock market rocking and rolling. So that's one thesis. The other thesis is this, is that bank stocks, which have been ripping these past couple of weeks in anticipation of what happened yesterday, and bank stocks soared despite record high usage of a Fed bailout facility. So the regional banks are still going to the Fed and saying, please help us, please, we're in trouble. And this has been going on since March. So they continue to tap the Federal Reserve. And the Federal Reserve could be saying, you know what, we got to resolve this. Somebody's going under. We got to get this resolved. And I think that this is a very good reason, in combination with Biden putting the pressure on Powell to cut rates in 2024 to get the stock market rolling, to get yields lower. Lower yields helps alleviate the pressure on the regional banks because they have all those bonds that they bought at very, very low yields. Now they can redeem them, get rid of them, and then they have capital that they could loan out at higher interest rates. And that takes the pressure off the Fed to keep lending them a bailout facility. What else is going on out there indicating recession is that while we had a yield curve which was steepening, that steepening has now dropped back down into an inversion. Remember, it was only a couple of weeks ago we were talking about a major breakout here, higher lows, higher highs on the yield curve. What happened now? We broke the lower band of the rising uptrend channel. So right now, when I see this, I have to say, we know what happens because I talk about it all the time. We know what happens when you get an uninverted yield curve. Here's the yield curve monthly chart in black and gray is the S&P 500. And you can see what happens when we steepen, equities roll over, just like back here in the financial. What am I looking at here? I'm sorry, we didn't invert there. The financial crisis back here in 2000, the yield curve when uninverted, equities rolled over. You could see in gray, crash. That would have happened now. That would have happened this time around, but it's been staved off. Now you could argue that all we're doing is flagging out, and I'm open to it. but this could take months to play out. Here is your bull flag setup. That's a continuation breakout pattern. So right now, I'm coming here and I'm saying right now I'm bullish on equities. Yeah, short term, they're extended. You should be thinking about fading the news. We had the news yesterday. The street got what it wants. You have a lot of overbought stocks out there, extremely overbought. Boeing, CrowdStrike, what else? I'm short of it. GoDaddy, a whole bunch of names out there. Very, very extended. DocuSign, a lot of good shorts out there. So a lot of names are stretched right now. But I'm not ready to get net short the market because the market told us a few weeks ago, you're wrong. Cover your shorts. We did. We made a lot of money because we cut our losses and we made money because we got long. Now, but natural gas hurt me. I will say that natural gas hurt. So we're potentially bull flagging out here on the yield curve. We'll be watching it. If we begin to break out and we begin to move back up, my tune changes tomorrow if this happens. Then I start talking about, okay, now we got to be very, very careful here. Something may be amiss. Some event that we may not be sure of. We're assuming that it's the regional banks. We're assuming that it's the Biden administration putting the pressure on Jay Powell. That's why he took this path. Maybe it's something else that we don't know about. Maybe one of those banks is too late for. We don't know. We don't know. We have to keep an open mind. That's our job as traders. We know nothing. We know nothing. All we can do is sit there like Sherlock Holmes with our magnifying glass and say, let's look at the clues and try to put the puzzle together. Right now, we have no momentum on a steepening yield curve. We have equities which have broken out. They're near all-time record highs. The Dow Jones is at all-time record highs. Clear blue skies above for the Dow Jones Industrial Average. What's a boy to do, right? You gotta pay attention to the charts, and they're screaming higher highs to come. Now, looking at the regional banks relative to, this is a ratio chart. So this is the KRE, the regional bank ETF, relative to the XLF. That's your majors. And what is the KRE doing now? Dramatically outperforming the XLF. Now, on a weekly chart, I mean, this is a beautiful, beautiful setup here. So if you want to buy the banks, look at that. Breakout, pullback, retest, follow through, textbook, breakout. So regional banks breaking out, validating that this is good for the banks. Okay. What Powell did was good for the banks. The markets have spoken. End of statement. Now, have we gone too far, too fast? We'll go to the chart of the banks in a little while when we go over the weekly charts. As for expectations of a Federal Reserve rate cut, well, excuse me. So forget about January. We're looking at a probability of a rate cut in March that is now at 75.8% in March. 2 weeks ago, this was like 18%, something like that, something crazy. Going out to May, I mean, probability of an ease in May, this shot up, is nearly 96%. June, 100%. That's up since yesterday. July, 100%. We move on. September, 100%. What are they worried about? This is a hell of a lot of rate cuts. And remember that this is important. Jay Powell, I'll challenge anybody out there Jay Powell has never, ever disappointed what this Fed Watch tool has said he's going to do. Now, can this change between now and the next Fed meeting? Between now and March? Of course, it changes all the time. So, as it stands right now, though, market participants are expecting major, major rate cuts. This is why you're going to see the stock market rally. Now, once you get that first rate cut, it usually means that that's the top. But we have a couple of months to go. So this is Paul Volcker, probably the best Fed chairman we've ever had. It is a sobering fact that the prominence of central banks in this century has coincided with a general tendency towards more inflation, not less. So the Federal Reserve of the United States is put into place to prevent bank runs, to manage the currency, to ensure that we had a healthy, vibrant economy that kept inflation at bay. But all we've had is inflation. All we've had is the deceleration of the buying power of the US dollar. I continue. If the overriding objective is price stability, we did better with the 19th century gold standard and passive central banks with currency boards or even with free banking. That would raise the risk of more bank runs, but that's what you have an FDIC for. The truly unique power of a central bank, after all, is the power to create money. That is a weapon. And ultimately, the power to create is the power to destroy. Again, and ultimately, the power to create is the power to destroy. That's exactly what you're seeing right now. Exactly what you're seeing. Because I'm going to go back. All we're doing right now is sowing the seeds for the next run up, the next leg up for this balance sheet of the Federal Reserve. At some point in time, there are not going to be enough buyers out there that are going to want our debt. Or there aren't going to be enough buyers to support our debt. And the Federal Reserve will need to step in and be the buyer of last resort. And this, to get to where we were in 2022, there's something called the law of diminishing returns. So from 2008, we were at about, I don't know, 800 billion. Yeah. So when they first started this crazy policy of running up the debt, the Federal Reserve had a balance sheet of nearly 900 billion. And that ran up to around 4 trillion. So a pretty huge jump. Then they had to double it again, more than double it again. This time around, what are they going to need to do? Let's say they're starting now. They're going to need to take this up to get the same result out of the equity market and out of the economy. They're going to have to go up to probably about 14, 15 trillion dollars on their balance sheet. Think about that. Think about the interest that the government is going to have to pay. You want to know why? They have a case in the Supreme Court right now trying to tax unrealized gains. That's why. They can't afford the interest on the debt right now. It's equivalent to the defense budget. So this is just the beginning of the end. This goes back to Volcker's comment or his quote, ultimately the power to create is the power to destroy. And that would mean that the yield curve is ripping up higher with probably the dollar and bonds dropping through the floor and the equity markets just a basket case. So have we seen any type of reaction by the commodity markets that, you know what, what's happened this week is already stoking the flames of inflation. It has. We spoke about this on Sunday night, I believe, that copper was making a beautiful, beautiful setup. Now, they call it Dr. Copper for a reason, because it's an indicator of growth. So they anticipated what Fed Chair Powell was going to do, and they bid up copper in anticipation of demand. So what happened? In anticipation, we broke out this week, bullish key reversal bar, one of my top 5 favorite candlestick patterns, link below, 5-part video tutorial, free. My gift to you. So it looks as though copper is going to break out. There's only one problem. If copper breaks out, that means inflation is breaking out. I continue. Natural gas, which has gone through a crash of late, I know because I was involved with it. It's a trade that did not end well. And I covered on the bounce today. And we've saw a bid 2 weeks in a row now on nat gas. Is this due to anticipation of the Federal Reserve and their rate cut? I think so, because you also saw a bid on oil, bullish key reversal bar last week, follow through this week. So oil, this is a daily chart. Let me go to the weekly chart. Moving up higher. Today alone, 3%, nearly a bullish key reversal bar on the week. The stage is set for a move higher on oil. Why? Demand. Who's creating the demand? The Federal Reserve. How are they creating demand? Free money. Now, we were given a reprieve on gasoline for quite a while. But on the week alone this week, gasoline prices are up nearly 4%. Coincidence? I don't think so. Because we had a major breakdown not too long ago. This is a head and shoulders break. Here, watch. And maybe it'll still continue downward. Maybe what the markets have priced in as a probability isn't enough for the markets, and they want a more aggressive Federal Reserve. If you see that these commodities just roll over right away, that's telling you there's something very, very wrong out there. What Powell has said is not enough. It's not sufficient for the markets, and he's going to have to get a lot more aggressive quickly. So I view that any rally here in these names, a sustained rally, is as an interpretation that the Federal Reserve has done enough. They've done enough to avoid a calamity. Now, if you get a rollover here and demand continues to weaken up, they didn't do enough because this is deflationary. They want inflation. They need to get more aggressive. Food prices. This is the DBA, the Agriculture Fund weekly chart. They're up over 30%. They've been consolidating. I think that this breaks out. And eggs, what's that? Cal-Maine Foods. Look at the price of eggs ripping through the ceiling. And you wonder about how low the VIX is ever since the Federal Reserve made the announcement yesterday that you should expect rate cuts. How low after the stock market rally is the VIX? Because before the Federal Reserve announcement, it was trading with a 12 handle. It's still trading with a 12 handle, but look at the price action. This is not bearish price action on the VIX. In fact, you could argue consolidation, get ready for a rally in the VIX. What does that mean for the S&P 500? Stay tuned. We're going to go over the weekly chart in a moment, but it's not overly bullish. Higher lows on stochastic. This is momentum, not fading, but building. Higher lows RSI and higher highs. Again, momentum building, not fading. And you may be saying, wait a minute, you just started this commentary off saying, wait, you're bullish on equities. I said, in the short term, I am concerned about equities. They've come too far, too fast. I booked profits on the small caps today, raised cash. Longer term, I'm still bullish. Let's go to the weekly charts. First, let's go to comments. Happy Festivus to you, Jody. Seymour Rivers, thank you, sir. Mr. Sean, welcome. Hi, Bob. Happy holidays. Tom, happy holidays to you. Finally, this OCD Fed stop hiking rates. Gold and utilities should take off. Yes. My view on GUI. We'll take a look. Where is my notebook? My trusty journal. A fresh, clean page. GUI. GOOY. Okay, you got it. Dane. Hello, Dane. Hey, Bob, happy holidays. How would you play crowd? Okay, so crowd I was long of the other day. I booked profits on the spike up. I like CrowdStrike. Very, very overbought. I know it did a bearish reversal day today. We'll take a look at that one. I thought it was going to continue up higher. I mapped it out as a potential short trade, and I did not pull the trigger because it did not hit our price target, which I put at around 300. So with CrowdStrike, we'll go to the chart in a moment. We'll talk about it. But with CrowdStrike, I think that this may be a rest for CrowdStrike. Let that overbought condition come off a little bit because it's a great company. And I think that it could continue up higher. But at $300 per share, stiff resistance. However, that overbought condition may be off by then. Okay. Let's do the weekly charts. Bitcoin, let's do a refresh. Wow, they pulled back. Oh, this is a weekly chart. Okay. I knew it was up earlier. Okay, good. So weekly, we're down 1.72%, but since the Federal Reserve announcement, reversal. But still below our highs. I do think we're going up higher here. Yields crashing. Remember, one trading day left to go, but yields are crashing. We closed with a 3 handle for the first time since what? August? No. July. First time since July with a 3 handle. Daily view. We gap down into support. So we may get a bounce here in the next day or so. So keep an eye on yields. Still bearish. I think that if we get a rally, that we're probably going to hit resistance up at this upper band of resistance, and we're probably going to fade because what the yields are telling us is that we're probably going into some sort of a recession moving forward. So they're pricing it in right here, right now, along with Fed rate cuts. MACD, very, very oversold. So I think that we could get a bounce here in the next couple of days. In fact, I just want to check the futures action. Down at current on the yield. E-minis flat. All right. Let's check in with TLT, 20-year bond ETF. We own some of this. Broke out on the week, one trading day left to go, but it looks like we have a breakout. Next week, expect a retest of that breakout point, daily view. We're really extended here. We can go higher, but let's war game this. Here's your breakout. We closed right at resistance today. If we continue up higher, we're going to a little over 100 on the TLT. Tips, huge move. A nearly 2.25% move on the tips is a huge move. Now they're leaning into, in red, the third standard deviation Bollinger Band, a little bit extended daily view. I said daily view. Yeah, we need a pullback here. These are extended. They need a pullback. I would not chase these. Volume was good, but look at the fade off the high, and we're trading up into the 3D Bollinger Band. You know, when you get this, expect a negative reaction. Last time you saw this type of reaction, well, it was back here. You got a nasty pullback. Back here, you got a nasty pullback. Doesn't mean it's going to crash. It just means that on a relative basis over a 14-day period, we're too far, too fast. You need a pullback. Not supposed to happen. We're not supposed to be up here. The dollar. I mean, what can you say here? What can you say? Very, very bearish stuff. I mean, this is so ugly. We need to take a look at a monthly view, maybe even a quarterly view, to say where to from here on the, wow, Jesus Christ. So on the dollar, we have a major double top. If you wonder why the Dow Jones Industrial Average has been rallying, look no further than this. They export goods. A weaker U.S. dollar makes their goods more affordable overseas. Watch for support in the dollar at 28.50 on the dollar bull ETF, but this is a double top. We could quite very well take out the lows of February. That would be a confirmation major bear market for the U.S. dollar. Till then, we remain in a bull market, albeit it's under a lot of pressure. As for euro, bullish key reversal bar going up higher. Yen, bullish reversal bar going up higher. These are the two major currencies that trade against the dollar. Dollar's going lower. VIX we spoke about will pass. Dow transports rallied. We're at the upper band of the rising uptrend channel. We have broken out, though, above this upper band of resistance. So what could happen here is that next week we can get a pullback and a retest of this breakout point. Doesn't mean it's going to break down. It's going to be a retest. I don't know what's going to happen. It's probably going to hold, and then we're going to continuation move up higher on the transports. Dow Jones Industrial Average weekly chart, very, very extended on stochastics. We're up here, very, very high on momentum. The problem is that it can go up higher. Why? Because there's no overhead supply up here. There are no buyers looking to get made whole. Monthly chart. This is a beautiful base. We're going up higher. End of statement. We're going up higher. S&P 500 weekly chart. Again, very extended. The however is that $467 new all-time record highs. We mentioned this a couple of weeks ago. This is probably what was going to happen. The test is always at the top. One trading day left to go. Maybe we fail. But as it stands right now, we're breaking out. Actually, this is a monthly chart, so we have several trading days left to go. Qs. Monthly view. Prior all-time high, 403.43. We closed below it today, but we'll probably be there tomorrow. So when you look at this chart, you know, a lot of people, especially new traders, they think, man, this is like a Wile E. Coyote moment that, you know, The coyote goes running off the cliff. He doesn't realize he's still running, and all of a sudden he realizes it. He looks down, and you know, that's not the way it works. The way fund managers look at this is that if you have no sellers above, well, that just means that there's no overhead supply, no resistance. It's very easy to keep the markets moving up higher. They can get very, very extended before ultimately you see a lot of profit taking. So don't go shorting a market, or at least an index that's breaking out to new all-time highs simply because it's breaking out to new all-time highs. That's crazy. Now, going through a weekly chart, looking at volume on the week, we could be better. This is a concern to me. And when you take a look at certain individual stocks, and these are your leadership groups, let's just type it in here. Microsoft, double top, getting ready for a confirmation breakdown. What's that all about? NVIDIA, up today, only a 0.5 percentage point, not broken, but not really participating in this rally. So what I think you're getting here is a bit of sector rotation, small caps, mid caps, large cap manufacturers. Whereas tech, as measured by the XLK, still strong on the week at new all-time highs. In fact, XLK hit new all-time highs before the Dow Jones did. But you take a look at a daily chart of technology, it was down today. Semis, they're just beginning to run. Daily view. However, they are extended. So this is a classic example of what I mean. Short term, we're extended. We're due for a pullback. It's a healthy thing, not a bad thing. And then you reload. I mean, I booked profits on the TNA today. Right? We bought it here. We sold it just off the highs of the session today. I want to see a pullback, and I'm a happy buyer. I'm a happy buyer. I just want to trade it right now. Why am I going to sit here? You're going to get a pullback. I'm telling you, this is not going to end well. We're going to get a pullback. It's going to happen. And we'll buy back in. Right? We'll dollar cost average back in. Biotech's LABU, we own this, and it's doing really, really well. Really, really well. We need to buy more here or sell puts. It had a reverse split. So now you have a lot of institutional buyers that are able to buy this, because before that reverse split, it was trading below $5. A lot of institutions won't bother buying, or they can't even buy stocks, ETFs below $1. Let's take a look at the IV ranking here. Sell some putties, assuming that they're attractive, and they are attractive. 51% IV ranking. Very, very attractive. So LABU, we're going to be doing something with very, very soon. Consumer staples, weekly view. They dropped today pretty hard, but they are struggling to get through a lot of resistance here. Not much to talk about. Discretionary names, buy now, pay later, fueling this run up. Expectations for rate cuts. The banks will probably become a little bit more elusive with the credit lines, and people are going to blow through it like a hot knife through butter. They're going to spend. That's what Americans do. Emerging markets. I'm a buyer of emerging markets. Love emerging markets. Looking good. $1 a week. You got to be an owner of emerging markets. Daily view. You just can't do it right now. Too extended. All you need to do, if you're wondering, where am I going to get in here? This guy's got me scared. It's simple. If you're bullish, take your crayon out, You sell up at the upper band of resistance, you buy at the lower band of support. Easy peasy. Energy. I got to tell you, energy stocks, which are very, very cheap, they are looking really sexy here. And I remember on Sunday night, somebody had asked me to take a look at the chart of Oxy, and I was not overly bearish on it. I said, if you want to trade it, look at selling puts. But I'm sure that that chart now is looking pretty good. I haven't looked. Yeah, bullish reversal bar. So I was right on Sunday night. I said I thought it would go lower. It did go lower, but now it's reversed. And this is what you need to do. You can't have a steadfast rock head and say, I'm committed to that short call I made on, not a short call, that bearish call I made on Oxy on Sunday night. Oh, today's Thursday. All right. That was a different world ago. So now we got to take a look at it constructively and say, all right, what's Oxy doing? New weekly lower low? Yes, we have that. However, we're well off the lows, possible bullish reversal bar, possible breakout, daily view. I wouldn't buy it here still. Yesterday was the day. I think we're going to fill this gap, but I think that it's going to look pretty good in the coming days and weeks. Assuming that what Powell is projected to the market is sufficient enough to stave off whatever he's worried about. And only the market knows that. We did oil, skip that. Gasoline, we did that, skip that. Gold. All right, so gold on the week is now up 1.51%. I booked profits in a naked put position today on NUGT. I'm going to look to reestablish that. I needed to raise liquidity because of two big shorts that I have on or putting on, and I want to make sure I have enough liquidity to get big enough on those trades to make ideally a quick. However, I don't want to cheat myself and not have liquidity for an emergency. So I raised capital, and we are looking to we are shorting right now. I'll go into it if you're interested. I may have mentioned this on wrong chart list on Sunday night or over the weekend. GoDaddy. So we began shorting, I think it was last week, maybe last Friday, I think it was. And we've been building, nibble, adding on strength with RSI. That was nearly 90 at one point, actually over 90. Now you can see that we're putting in lower highs, lower lows. Stokes are rolling over here. Today, an outside reversal bar, AKA a bearish engulfing of yesterday's move. Very, very bearish price action on GoDaddy. We're profitable on the trade now, but we do have a lot of options here, about 25 contracts. So that's about 2,500 shares of GoDaddy we're short of. And I'm going to be looking to book profits on probably the next sell-off that we get. Ideally, we get a follow-through sell-off tomorrow. Not quite sure if we're going to get that because the 5-minute chart today at the close looked pretty good for a pop in the morning. So here's the left shoulder, head, right shoulder. We may get a pop in the morning. Hopefully they sell into it and we get another leg down. And I'm going to look to book profits there, raise capital, and then we target our next victim, which is Boeing. Now, Boeing, we began bear operations in today. Now, you may be saying, wait a minute, what's wrong with you? Boeing was up today. It's very, very strong stock. Yes, agreed. Here's the however. Daily chart, Boeing. We have RSI on Boeing, folks. Boeing of 91. We are trading at the upper band of the rising uptrend channel. Can it break through it and shares. What the heck just happened? That was weird. That was really weird. So taking a look at this is what you call unsustainable. Now, we have a price target of where I think we're going, probably up to 260 to 262 per share, and then we'll get a correction. And on that correction, hopefully we'll be fully short, and then we look to exit stage right with a profit. We take profits on GoDaddy, we take profits on Boeing, and then we raise liquidity, and we look for our next victim. Now, I want to go back to GoDaddy for a second and show you the importance of understanding the internals of what's going on intraday with these trades. Because last night on market, I talked with members about what I was seeing, because we went adding more today as the shares began to draw this line this morning. I drew it last night. And I said what I believe is going to happen here is that we're going to double top out. And sure enough, that's exactly what happened. We double topped and we began to break down. Down volume began to outpace up volume. Stokes, bearish divergence, lower highs. Then they broke to lower lows. RSI, lower highs and lower lows. This is how we knew it was okay to begin leaning in even further as the latest this morning. And then we sold off hard. Not hard. We sold off, to be fair, not hard. So are we seeing the same with Boeing? I doubt it, but I haven't looked yet. So not really. Again, a 4-hour chart, if I didn't say that before, we're still getting higher highs and higher lows. I don't know why that keeps doing that. Hopefully you're seeing that on your end. On balance volume, still looking good here. So the still high. We're probably going higher. On Boeing. Okay. Gold mining stocks, and then we'll go to some chart requests. GDXJ, bullish. I shorted it this morning for a scalp. We took that scalp off because what they did is they closed us out yesterday with RSI up here at around 89. So they goosed it this morning. You knew there was going to be a fade, easy scalp, in and out, quick one. Now, gold mining stocks looking good. Silver looking really, really good. We're probably going to be buyers of more at the close tomorrow. So loving the commodity space. Inflation's on its way. Bravo, Federal Reserve. You did it again. More inflation to come, and we'll be ready for it. Let's do some comments. Wow, you guys were busy making comments. Do you think Barrick Gold will finally make a move to the upside? Yeah, we'll take a look at it, but yeah, probably. I mean, you have the Senior miners, junior miners, they're all moving up. I think so. Happy Thursday. Happy Thursday to you. Market is volatile. Lots of opportunities and risk. Let's go, baby. Yeah. Dane. Oh, we already went over that one. Hello, Bob. Why is this market making new highs? Easy money, pal. Don't fight the Fed. Simple as that. Don't read into it. If the market rolls over right now, it's because the Federal Reserve was too late. Okay. I'm not saying by virtue of the fact that the Federal Reserve has announced rate cuts coming down the pike that equities 100% are going up higher. If they do not, if we get the mild correction that I expect, and that mild correction turns into a major correction, the Federal Reserve is too late. Whatever they were trying to stave off, too late. The Titanic has hit the iceberg, and the captain jumped off of the helm yesterday. It's too late. So we'll see what happens. But I think that it looks as though we're probably going higher. Pfizer, junk stock. I tweeted at that CEO yesterday when their price dropped 6%. I was very, very happy. And I just gave him a reminder. AMD for Jody. What does that mean, a three handle? It means 3%. A four handle would mean 4%. Good question, though. The replacement of gold and other companies in GDXU, 3 times of all the index. Just be careful of that. 3 times they break, pal. During 2020, you had NUGT, which is a leveraged ETF. Back then, it broke, literally broke, and they had to change it to a 2 times. Be careful. I prefer NUGT 2 times. Don't get greedy. It's not worth it. Trust me, I was in it. My average price on Dish is all right. Well, congrats on the VGR, but hopefully you get your money back, pal. That's like my nat gas trade. Bob said on Tuesday that the market was overbought. Yeah, and I think it's still overbought. I'm shorting the market. I'm not shorting the market. I'm shorting individual stocks. So I believe that they're still overbought. Overbought does not mean that you can't correct and then move up higher. They're just too extended for me to initiate new trades right now. Or I had a major gain on the TNA in 2 days. Why am I going to let that slide away when I know I'm going to get a pullback? I could buy back into it. Doesn't make sense. Bob. CMB said, is it Bob Pisani you're referring to? Yesterday, that the shorts is also another reason to rally. Yeah, they need to cover. They need to cover. They have no sellers of like mind above in the equity arena, unless you're trading individual stocks, to help them with their positions. Okay. Okay. No, I'm not shorting gold. Definitely not. I'm a buyer of gold. Yeah, Bob Pisani, and I don't mean this disparagingly, but he could sell snow to an Eskimo. That guy is a salesman of all salesmen, and I say that with all due respect. I happen to like the guy. Again, he's a salesman. So be careful with Bob Pisani. He could put lipstick on a pig. Yeah, I got that down here. WBA. I have that down here, Harry. All right, let's get to it. We're a little bit over. And folks, if you could just do me a favor, like, subscribe, you know the deal. Help me out with the YouTube algorithm. They shadow ban me. I've been at 3,000 subscribers for like, I don't know, over a year. There's only 31 people on here right now. I used to get a lot more back in 2020, 2021, a lot more. All right, GUI. I don't know what the hell this is. Google. I guess this is a short ETF. I don't know what this is. I don't like it. Whatever it is, I don't like it. It's in a downtrend. I'm not a buyer here at all. It bounced today. Maybe it'll pop. Oh, this is a 2-hour chart. I don't like this. I don't know what this is. It gives me the warm and fuzzies that it's one of these products that just deteriorate in value because they're based upon a derivative like a leveraged ETF. So I'm not loving it. No, it's he's got it down here, GUI, and it says up here Google. So I think that's what he means, Michael. CrowdStrike. All right, so CrowdStrike. To talk about CrowdStrike, we need to have RSI up. Let's get rid of this. RSI, daily time frame. What am I missing here? Where's my RSI? Oh, that's SMA. Wrong button. Sorry about that. RSI on CrowdStrike, despite being down today, is still elevated at around 88. So the key to making money, and I have a listogram below. It's free about how you short these names or how you buy these names if they're extreme oversold. It's free. Download it. I don't need anything, no money, no nothing like that. I just want you to get to know me. That's simple as that. So we're in an ascending wedge formation. Generally, these get resolved to the downside. I think that this breaks out. I think it moves higher. That's my hunch. I think today was a pause that refreshed. Yes, RSI very overbought. Yes, volume rose today. The however is that when you take a look at a monthly chart, we have overhead supply up here at around 300. Now, 300 could be resistance, or it could be the closing bars here at around 279. I don't know which it's going to be. You could rally up to 279, 280, overshoot to the upside. I'd be a shorter up there. I would try not to short this stock right here, right now, even though it was down today. I would want to do it on strength. I think this goes up higher. And when you take out your monthly crayon, you could see that this could go up higher and easily reach in probably not in January, later this month, these resistance levels. So let's take a look at seasonality on, for that matter, Boeing as well. Seasonality for the month for January, going back 5 years, not a lot of data, up 75%. Do we have more data than that? I don't think we do. We do not. Unfortunately, no, we do not. So that's not, I wouldn't rely too much on this seasonality, too thin of data. Usually you want at least 10 years. Now, so those are my price targets on CrowdStrike. I'd be shorting at those levels. Assuming you still have RSI very, very overbought. If it pulls back, consolidates, and has a healthy breakout, I'm not going to short into those resistance levels. I'd be looking to be buyer of CrowdStrike at new all-time record highs. What else? Boeing, I wanted to check out seasonality. So luckily for me, seasonality going back 50 years, that's a little bit too much data, is poor in January. Let's thin this out a little bit. Let's go back to, let's say 2000. We're using TrendSpider. They have a Christmas code. I forget what they emailed it to me earlier. What is it? What is it? Holiday sale. Holiday sale with trial. 25% off their best package, 18% off their lowest package. Annual prepay, 72% off. That's the elite package, and you get 36% off the basic package, and they have an intermediate package as well. Use the link below. Don't use my discount code. I think they're already giving that to you already with no discount code. So there you have it. TrendSpider. Okay, so going back 24 years, consistent, fairly weak in January. Good to see for me because I'm short. I'm building a short position. Now, what else do we want to talk about here? We did CrowdStrike. Gold. That's Barrick Gold. This is not the product, the commodity. Monthly chart consolidating nicely. We do have overhead supply above. Weekly view. We're getting ready to break out here. I think Barrick's going to get resolved to the upside. Loving this 3 candlestick formation. One of my top 5 favorite candlestick patterns. Link below. 5-part video tutorial. Daily chart. We broke out today. Hard to see, but there we're at. We do have another resistance level up at 18. Barrick Gold. Very bullish. I think that it's moving up higher. Watch the dollar, though. As long as the dollar continues lower, rate of change on these move up higher. Pfizer, the demon of all companies. I thought Goldman Sachs was no longer dethroned, I should say, by Pfizer. Pfizer down to $26.13. This company should go bankrupt. This is a daily chart. Nice bearish reversal day. They tried to take it up. Buyers aren't having it. Way too much concern about what's going to happen to these criminals. We're holding weekly support, though. Big down volume. I'm not a buyer here. I would never buy this stock. I think it's uninvestable along with Moderna. Let's take a look at that piece of garbage, mRNA. I think this popped, though. Yeah, it did pop. But I'm still not bullish on it. I think that we could be seeing here a bear flag setup on Moderna. Watch this. This is the bottom with my bearishness on both these stocks. WDA or is it WBA? WBA, right? What is it? Walgreens Boots? Yeah. Still got it. Weekly chart breaking out. It's a buy. Resistance up at 28.60. Daily view. Good volume on the week as well. Good volume on the day. We have resistance above. Watch for a retest. I think you're going to retrace back down to 24.52. I'm a buyer at that level. Right now, you're kissing the 3rd standard deviation Bollinger Band, and you're hitting a volume shelf, not the place to be. So I would not initiate here. I would be a buyer down here, 24.50 the share. Last one up for the lovely Jody. We have AMD. AMD looking the bomb. Semis playing catch up with technology. AMD leading the charge here. Awesome chart. Breakout weekly time frame. I think that we retest next week. Looking for an entry point at 137.88 on that retest and a follow through. I'd add more to the position. I think AMD is going up higher. Daily view. A little bit of resistance here. Daily view. I'd be a buyer in a close above 141 per share. AMD bullish on great weekly volume. A bit overbought here on a daily view, RSI. So just be careful. I would be nibbler here. Watch for consolidation above this breakout point. Nibble, nibble, nibble. Then add more on a continuation breakout. Folks, thanks for being here. Have an awesome weekend and have a profitable trading day tomorrow. Like, subscribe, you know the deal, and I will talk to you soon. Be well.